Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 26th of August here in 2021. On Tuesday night's video, we talked about planning for a pullback. Took a couple sessions, but we are getting that pullback. And that's just on the basis of nothing more than a market that goes up, it's still trending to the upside, does not go straight up. It does not do this. It does not do that. It wiggles and squiggles in what we define, even in simple terms, as higher highs and higher lows. That's just basic trend structure. So given a higher high, the next move in the market most likely is for a higher low. But again, I like to play very short term with the trades, and that means about 2 to 3 to 4 days into the future. The most recent plan completed with a, is this time any different? And of course the answer was, now that we know it, it was not different, because the pullback led to a new high. And that's the, I think, the 7th time we talked about as that playing out. But we're just having the same conversation we had the other times. Given that we're at the top of a swing or rally, the next phases were pullbacks. I like to call them flags. I also call them rubber band snapbacks, whatever term you use. It's just for a downside move in the market. That's on the S&P futures. The Nasdaq is doing it too, and it's down against about 15,500. The Dow Mini Futures, that's playing down against 35,500. These are, of course, key levels to watch. And in the S&P, that's about 4,500. Just about made that print on the futures, but just a quick note, it actually did print in the SPX, and that was my musing or wondering in Tuesday's video. I bet we get that 4,500 before we get a pullback. That was exactly what the market had in the cards. But the Russell is just not in the similar trend as the other markets. In fact, it's not a trend at all. It is range bound and it's sideways. That leads us to play low to high, high to low, or instead of retracement trades, fade trades. So fade means to go short into the highs or purchase puts. Fade, similarly, means to go long into the bottom or the support level. So, and I like to play just to the midpoint because that's where the edge or the probability tends to be. And that's just basic mean reversion. If this is a probability distribution, if it's a standard log or distribution table, we'd have about 2 standard deviations here. 1 is roughly here. And when the market finds itself between the 1 and 2, that gives us some short sell short term. Trades are long, short term buy trades. Again, calls, call spreads, put spreads work just fine into my favorite being the ETFs. That would be IWM, which has achieved its target. By the way, I'll add this to the chart. The IWM, which is the Russell futures or the Russell ETF, play the high here, and the midpoint is roughly where we are. And that is about 220 or about 221. Actually peaked at 224. Again, short-term plays. We do have in the remainder, here's today's market, where the indices, the weakest was the Russell, down 1%, and now the other 3 were down 0.5%, although it certainly felt like a bigger sell side day. But the market is here. This is our sector performance. Every sector was red. And taking a note, the weakest sector, XLE, not a huge part of the SPX or the broader market, but XLE is actually right here. It was down 1.5%. Next up was discretionary, and that is right here. And that's where we would include, strangely enough, Amazon and Tesla. We might not think of them. We think of them possibly as technology stocks, but they are actually retail or consumer discretionary. And that's going to include Home Depot, Nike, and Target, General Motors, Ford, and McDonald's, Starbucks, many other names that are weak in today's session. Beyond that, we'll look at profiles. And what I'm showing here is just the basic volume profile. And I'll use a couple of equity futures. The logic, once again, is a probability distribution where this looks like it's not quite perfect because markets are not perfect normal distributions. But this is the positive 1 standard deviation. This is the negative 1 standard deviation. And again, the edge or the probability comes from fading. Fade means when the market's going down, your trade fades the downside by buying calls or getting long. And when the market goes up, your trade is considered a fade because you are going short. You're playing the other side of a rally, and you're doing so with puts or just short sold shares. And you're going to target a move to the downside. That is, again, planned from Tuesday's video and end of day reports, but had to endure one little poke, one little push, one little prod, all the way to the 4,500. If we go outside the equity market and talk the same logic in crude oil, we see that it came from above back to the middle. And just recently, if we extend these lines out and the probabilities, still a long. Again, you're still going to fade. Fade means when the market's going down, you're going to fade long or play calls. We got a little push just like the S&P. If you went short the S&P, you had to endure one day of a poke to the upside. Going long under the profile on Thursday had to endure one little poke to the downside. That takes confidence. But Monday was trend up, Tuesday was trend up, and Wednesday was trend up. And that takes us to our target, which is often the middle of the profile or the distribution. And again, that's just basic mean reversion. Gold did something similar, and we'll just draw these out. And that's a fade from above back to the, I play conservatively, and conservatively means the middle of the distribution or the mean, which is basic mean reversion. The bond market did something a little bit similar, but it came from above all the way to the bottom and is rallying up, which makes perfect sense if you put this into context. When the equity market, we'll just look at the SPY quickly. When the spider's SPY is above the red value area or the yellow value area extreme, that puts on a short or at least a scalp or fade, expecting downside action. At the exact same time, the bond market, we'll look at TLT, was beneath the profile, beneath your levels, and it favors a rally to the upside. That favors a long. So when the S&P is above, coming back, you can often expect the bond market will come from under back inside. So far, that's happening. Of key note in tomorrow's session is going to be the calendar. Although we have consumer sentiment and in thinkorswim, you can always go to the Market Watch tab and do the calendar and then pull up any earnings or dividends or any type of events. But in the economic forum or the events, we have consumer sentiment, and of course you can look at what it means, what they expect, what the previous was, etc. When it will take place, that's 7 a.m. But it's going to be Federal Reserve Chair Jerome J. Powell. He will deliver his remarks, and it will be what we call affectionately Jackson Hole, the Jackson Hole meeting, which is an annual meeting of the Fed. This time will take place not in person, but over Zoom. Nevertheless, his statements could move markets and probably will move markets. And we'll be watching those as traders and, of course, managing any open positions, closing, or perhaps establishing new positions as we see fit, as we manage risk or push for some rewards or some gains. And before finishing up in today's session, although the headline news was bearish and took the market back down, I would say as expected, or I should say as the probability favored, keep in mind that there were some stocks that had outperformed the market. It wasn't all bearish. Salesforce.com, for example, was the strongest in the S&P 100. But looking at our scan results, as frequently we do, stocks making new 52-week highs would include Google, Morgan Stanley, Goldman Sachs, and Regeneron. But we're getting into small market cap names. So although there were 33 of them, Ulta Beauty, Quanta Services, NRG Energy, the rest of them, Zebra Technologies, might not want to put trades or at least even bother. You may be different, but I tend to focus my trades and my attention in this area, which is high market cap names. So a few of those before we conclude. On the daily chart, again, looking at the strong stocks getting stronger just to get a different perspective. And there's Alphabet / Google. It pulled back. That's expected, but it made the new high. Morgan Stanley. And again, the same thing from Tuesday's video. We're setting up shorts, setting up fades, and this would play into these individual stocks, which include Morgan Stanley from the 105 level, Goldman Sachs from the 420 or 419 level that triggered in today's session. And we'll leave it there. Not a whole lot of other candidates come to the top of the list. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update. for August 26th, 2021.